What do we need to understand about what they said about reserve releases and sort of the near-term uncertainty that's reflected in the reserves that are still there?
Well, look, I look at JPMorgan like I look at all these, Citi too. There's going to be a tale of two cities, which is that there's before the vaccine and then after, although Citi believes that it's going to roll out more slowly. JPM, I'm just going to say this was one of the greatest quarters that I have ever seen. And the stock was justifiably up. And then Citi reports and people said, And then Wells Fargo reports. And Charlie Scharf, who runs Wells Fargo, is not a promoter. He's an operator. And he told it like it is, which is he still is nowhere near where he wants to be. And that's why that stock is brought down. David, when you have a CEO who is as blunt as Charlie Scharf, and he says, we're not there, you can't say he's there. And no. I think Charlie brought things down by being just...
Yeah, but although Jamie Dimon is pretty blunt as well.
Yeah.
I mean, you don't get a lot of shading with him.
No.
At all. And they had a good quarter, right? I mean, obviously reserve releases
right.
Certainly helped. But you
really?
Think that the tone for the banks is going to be led by Wells Fargo, even though we all know Wells has been in a very different set of circumstances.
Well, it would be wrong. I mean, Wells isn't about to be, I think, the sanctions against Wells are going to go away. Scharf is fixing things. But you know what? Dovetail the retail sales, David, with what happened with these guys, with all the banks. People are not spending. They are saving, okay? It is unprecedented saving. So I think that it actually hurt all these banks that the hunkering down is not a good thing for a bank. They need people to take a loan. Carl, we have the best balance sheets that we've seen in a long time. I know that we have to do stimulus. I wish it were targeted stimulus because it's really the people who are out of work that need it. Because if you look at the numbers from these three banks, the people who have jobs are doing fabulously, and they're not spending because there's nothing to spend on.
Although, well, Jim, look at JPM credit card spend. Q4 down 3.
Yeah.
Before that, Q3 was down 8. And before that, in Q2, is down 23. So directionally, the numbers are moving in the right direction.
Well, yes, but I mean, actually, Citi's not as strong as that in terms of spend. I just think that what we all kind of felt at this point was that maybe the fourth quarter was robust for finance. All right, we saw more deals. There were an incredible number of IPOs, but it wasn't strong enough to offset even the 8%. David, I still think that the theme is vaccine, vaccine, vaccine.
Yeah, well, that's probably true. Let's not forget, the financials have been incredibly strong since, well, really since late November, sort of after Thanksgiving, when JPMorgan increased and got the ability to increase their buyback significantly. Right. I mean, we've seen a huge rally off, of course, lows and what was a terribly performing group for much of 2020.
But it's a reopening trade, and we're not reopened yet. That's the problem. I mean, Carl's right about the progression, but everybody bought these stocks saying, you know what, we got to buy them now because of the reopening that's coming. Right. And then this is a rude awakening because you find out, wow, maybe I jumped the gun.
Also, net interest margin still plays an important role here. And JPMorgan's income from, net interest margin income is not going to be what it was. No. Even back in 2019, when you would imagine rates were not particularly high, but they were higher.
Shepard Smith here. Thanks for watching CNBC on YouTube.